We have established our big picture pretty clearly. To reach our climate goals, we need more investment, and way more innovation. So we want to speak to some entrepreneurs, to some funders who are making that happen. First, to set the scene, very pleased now to welcome to the stage co-head of investment strategy at LeapFrog Investments. Please welcome Nakul Zaveri. How are you? Good. Have a seat.
Thank you.
So let's start, first of all, with defining, you're a climate investor.
That's correct.
Big words, think about sustainability, but define sustainability and climate investing for me.
Yeah, it's tricky. Whenever you ask a lot of people, when we're looking at sustainable companies and we ask them, what is sustainability? Sustainability is such a broad topic. But if you take the noise out, it's essentially the ability to endure, right? That's what sustainability is. And then you can apply it across different segments. Climate is a little different. It's unlike any other classification. It is not a category. It is not a technology. It is a physical reality, right? And that physical reality is motivating societies to transition in ways that they haven't done before, at a pace that they haven't done before. Specifically in areas about how we generate our power, how we grow our food, how we move around, and how we build our cities. And these are 4 areas which are also very critical to the emerging consumer to give essential services. And for us at LeapFrog, our investment thesis is built around the emerging consumer. And in our climate investing strategy, we invest in those 4 areas, which is energy, food, mobility, and built environment. And therefore, climate touches everything. It is not separate from a different category. It will affect financial services. It'll affect packaging. It'll affect consumption. It'll affect education. And there are 3 or 4 levels, right? There's a short-term play, there's a medium-term play, and there's a long-term play. And just to end that with climate risks are as conclusive to what smoking is to lung cancer, right? And I want everyone to think about this.
All right, say that again.
Climate risks are as conclusive to what smoking is to lung cancer.
So completely a cause.
However, we are doing very little on climate risks. We're trying to do a lot on smoking. Obviously, about 7 million people die of smoking every year. About 8 million people additionally die of air pollution every year. But, and I was talking about this in the morning, it's very difficult for humans to understand long-term implications, right? It's difficult to leave smoking.
And also exponential implications. So it's quite difficult for human beings to understand the exponential risk that happens when you start to go every degree that the temperature rises.
Absolutely. And it's very difficult to understand risks, but it's very easy for us to understand opportunities. And for us, as investors, again, we need to see both sides of the coin. We not only need to understand what are the risks emanating from, and therefore what the downside is, but is there an upside? And that's what excites us.
So I snooped around your website, snooped around about what you do, and you talk about a critical idea, which is the green discount. So tell me what that is and how it shapes your investment decisions.
I think throughout the day, a lot of people have spoken about how green technologies are becoming economical. Baroness Scotland mentioned about the might of private capital coming through. Morally, all of us agree to a low transition to a low carbon future, right? I mean, there's no debate around that.
Yeah.
But the reason we don't do this is because there's a positive abatement cost. There is a cost that we need to pay, which is more than what we are doing right now. The moment you have a negative abatement cost, it just makes economic sense. And therefore, in certain technologies and products and services, there is a net negative abatement cost, which means while reducing emissions, you're also saving money. Solar energy, wind energy, mobility, specifically on 2- and 3-wheelers. In some cases, 4-wheelers on the commercial side. We're seeing parts of mechanization on the farming side, and we're seeing certain aspects of urbanization element happening. And therefore, there's a very clear transition from a green premium to a green discount. And specifically in emerging markets, if there is a green discount in play, adoption will happen.
Right.
And adoption will happen because growth is tremendous in emerging markets in the next 3 decades. About 50% of GDP growth is going to come from emerging market. Almost every new person added to the population is going to come from emerging markets.
So if this green discount is so big, I mean, I think at one place I read 30 to 40% over carbon alternatives, why are we still so short of the investment levels we need?
Oh, exceptional question. Some of these unlocking has happened recently, right? These technologies have taken decades to come where they are. I'll give you a very simple example. The technology that we use in wind generation or solar generation is not groundbreaking, right? It's not 5 years old. It has been existing for the past 50 years or so. But what is exciting is the grids are in place. The contractual ecosystem is coming into play. The legal system is putting aspects into play about what happens when contractual obligations are not met. And specifically in emerging markets, someone spoke about VUCA, which is how volatile, uncertain, complex, and ambiguous emerging markets is. The other way to look at it is poly risks that always exist. And how do you start addressing some of these poly risks for adoption of those technologies to come through? And then 4 or 5 things have aligned post-COVID. The availability of low-cost technology, but also carrot and stick approach from the governments. The regulations are moving faster than we have seen before. I mean, look at what the US has done with IRA. It changed, it was a switch, and now everything is going to, emerging markets are doing phenomenally well when it comes to applied technology, which means that technology that is working, you bring here and you scale it. So for example, mobility. 2-wheeler and 3-wheeler mobility is currently 30% green discount than the ICE alternative it has. With subsidies, it'll become 40%. With battery swapping, it becomes 50%. It's a no-brainer, and it's happening today.
I'm really interested in what we need to do to scale up innovation in, pick your word, the global south, emerging economies. And what can we take from the West that the West got right, the richer countries got right?
Yeah, I think what the richer countries got really right is fundamental R&D. Right? There were dollars, there were universities, there were skills that really developed the technology. They also had a venture program which did large companies, bought them up, scaled them up. Emerging markets don't have R&D dollars. And therefore, what we are seeing is, parallelly that is evolving. But at the same time, the confluence of internationalization or globalization in these green technologies is working phenomenally well. And therefore, if we can take those technologies that are working, bring them to emerging markets, get a green discount in place, and scale them up, that's what innovative business models happen. So on the deep tech innovation, you apply a business model innovation in emerging markets. I'll give you a very simple example, battery swapping. Battery swapping in 2- and 3-wheelers don't exist in the West. It doesn't exist because of a number of reasons. Because of the dense nature of the cities we have in emerging markets. The electrification in the West has happened top-down, 4-wheelers and below, whereas in emerging markets happening bottom-up, 2- and 3-wheelers. The habits that we have. And that's what is exciting.
Okay. So stay where you are. We're going to bring up 3 entrepreneurs who are working in these areas that you're talking about, mobility being one of them. We've got the 3 clean tech entrepreneurs here. Please come up as I just now, so I'll call your names. Co-founder of Planet Electric, Gagan Agrawal. We've also got Kaustubh Padakannaya, co-founder of Pyse in India, and Jagmohan Gaarg, co-founder director of Accacia. Welcome, gentlemen. How are you?
Doing great.
Good, all right. Well, now, I didn't tell you that this was going to happen, but what we're going to do here is have a sort of, it's like a mini Shark Tank. It's like the sort of Shark Tank of the Red Sea, right? Shark Tank climate action. So first of all, let's hear from Planet Electric. So mobility, we've got somebody who invests in mobility here. Tell us first of all what Planet Electric does.
Sure. So think of us as material science guys who come in and look at four-wheelers, trucks, and see the inefficiency in the V of the EV. We've spoken only about E. What about the V? It has remained the same over 50 years, extremely inefficient. So we come in, we lightweight the chassis, the cabin, the cargo box to 75%, save 50% of the battery, and suddenly this four-wheeler EV is commercially viable.
All right, good. All right, so Nakul, you jump in with any questions that you have. What's your manufacturing plan?
Small steps. Get a 2,000 unit factory up and running next year.
Where?
In Gurgaon, Delhi. We already have the orders. So customers are lapping us up because, of course, we are giving them a discount over the traditional vehicles. We are 20% cheaper than anybody out there in the same category, 1-tonners and 2.5-tonners. And then post that, we'd love to be here in the Middle East with a 20,000 unit plant. Scale up.
And why do you think if you're going to take small steps, the incumbents will not catch up?
The incumbents can definitely catch up, but the incumbents have been sleeping for the last 20 years, to be very honest. The technology for composites is not new. We've seen composites in wind turbine blades. We've seen them in Formula One cars. We've seen them in yachts. It's just about engineering that material into the use case. We spoke to about 10 OEMs, and everyone has been, well, we have this legacy investment. Why ruin it? If somebody else comes up, we'll take a look at it. Like, okay, well, we should be the first one.
Okay.
Let's move on to, so from clean trucks to encouraging more investment in all green technologies. So Pyse, I've said that right, haven't I?
Absolutely.
I got it right. Okay, so Kaustubh, what is Pyse? Give an example of how you work with your clients.
Absolutely. I think the base for what we do is, again, set with the whole idea of green discount, right? And what we're trying to essentially do is get corporates who want to transition or look at transitioning to cleaner solutions from carbon alternatives to look at sustainability as a way of investment rather than an expense, right? How do we get them to transition to renewable energy in a way where they don't really look at it as saying, hey, listen, what should I really park a lot of my business and company funds to buy solar panels and install it, right? How do I get that idea of saying, hey, listen, there's a high barrier to entry for me? What we essentially do as a business is we allow investors to come in and finance green projects for organizations, thereby financing 100% of the project cost, leasing it to corporates, making it in a way where, one, the business does not really have to spend any money in setting up, let's say, a rooftop solar plant or electrifying their fleet with their own money, number one. Number two, cuts down on their operational cost by really giving them that green discount benefit directly to them, right? Because if you look at it fundamentally, renewable energy, electric mobility, or even water treatment for that matter, have very high upfront costs. But people don't really find a way to extract value out of the fact that they're operationally cheap, right? Renewable energy, like you rightly mentioned, is about 40-50% cheaper than grid, right? So our model is very simple. We get individuals like you and me to come in with ticket sizes as small as $60, right? To come in and finance small to medium scale projects for organizations. We give it to them on a lease, ensure there's no upfront cost from them, there's immediate savings, and our investors end up making money as a passive source of income from these assets, right? So one, we're making sustainability profitable for investors to look at this as a proper investment asset class. And for organizations, it's a way to really save and go green at the same time.
How do you make it possible or enticing for people to offset their own carbon footprint?
I think for the longest time, products and the way they've been engineered is in a way where sustainability is made to look at as a philanthropic activity, right? And there's an example that I shared in one of the roundtables in the morning as well. The moment we talk about sustainability and going green, the first thing that comes to your mind is that one website that asks you to check out by donating $1 to go plant a tree somewhere, right? It's likely that you look at that entire activity once or twice, and the third time you're like, listen, you know what, I've already done this twice, why would I want to do it again? Now, the only way individual climate action becomes scalable is if you provide a reward that is actually incentivizing the user to do it, and it's investment asset classes like this that actually make sustainability profitable, right? Today on the Pyse platform, individuals can track the carbon footprint of their day-to-day activities, right? Everything from the rides that they do on Uber, the orders that they buy from Amazon. We tell you exactly what the carbon footprint is as soon as you complete the activity. And suddenly there's a reason for the guy to invest because he's also making 10% return on that investment, right? So the idea of providing financial returns as a reward incentive over and above the feel-good factor just gives it a reason for people to come back over and over again and making sustainability a default choice, honestly.
Okay, we're going to come on to our final question, then I'll final guest, and I'll leave it to Nakul to give us a wrap it up. So let's turn to Accacia. What's the problem you're solving? And give me a good example for how you're doing it.
Sure. So it's said that measure what is measurable and make measurable what can't be. It's a statement by Galileo. And I believe the first step in managing emissions is to measure your emissions. And there are plethora of activities going on in any kind of asset, like electricity is turned on, ACs are being used, vehicles are dropping off passengers, purchases are happening. So it's imperative for large organizations, sovereign funds, developers, operators in figuring out what exactly is their carbon emissions across their portfolio. So what the problem that we are trying to solve, the number one is we help asset investors, developers, and operators in measuring their carbon emissions and helping them to reduce it using the AI-enabled SaaS platform that we have built. Second, over and above that, take an example of asset investors which has invested, let's say, in Vietnam or India, $1 billion in a portfolio, and say the world goes 2.2 degrees warmer in the next 30 years. What kind of value at risk they have? What will be the valuation of the property? So that's another problem that we are working on, where we would like to tell them what kind of climate risk they have.
Any question from you, Nakul, for these two guys? We've got little time.
I'm just excited. I've got so many comments to tell them. But no, this is exciting. There is an intergenerational value migration taking place. And all these three business models are bang in the middle of it. And this is, because we've been doing this for so many years now. I did my first environmental finance deal in the late 90s, but there's a massive global reallocation of capital happening, right? And to your point about value at risk is going to be a big issue. The way you are trying to give a different financial product is going to be interesting. Obviously, there are questions I have around CAC and so many other things is also important. Incumbents will come, will mess with you, but I'm sure you'll figure this out. But there's opportunity to get to the next level, and we have these problems are not going away. In the panels that we spoke before, we only spoke about the extreme side of it. We see massive opportunities, and if we don't capture these opportunities, and if we don't invest in emerging markets, investing in the West is meaningless. Because, as I mentioned, 50% of GDP growth comes from here, and therefore we will increase our emissions by 5x. But that has to be done on the back of green technologies.
Right.
And that's why companies like these become exciting as we grow.
Right. Well, thank you all, gentlemen, for swimming along with us. Thanks to our entrepreneurs for coming and sharing these ideas. Nice to do business with you, Nakul. Right. Thank you very much.
Thank you.
Thank you.
One quick picture.